Good evening, ladies and gentlemen. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Thank you for joining us for our very first investor briefing for the year. Today, we'll be diving into Mayberry Jamaican Equities Q4 results. And on the panel, we have none other than with us Chairman Christopher Berry. Welcome, Chairman Berry, who's with me in studios. And online, we have the Investment Manager, Gary Peart. Welcome, Gary. And also we have Patrick Bataille, our CEO of Mayberry Investments Limited. Welcome, Patrick. Thanks for joining us. Folks, if you find yourself tuning into this program on a weekly basis, but you still haven't subscribed, here's your chance. Hit the subscribe button and click the bell to stay updated. Don't forget, we'll be having a Q&A segment at the end of the discussion, so feel free to write down your questions in the chat, and we'll get to them closer to the end of the program. Additionally, if you want to embark on your very first investment journey, take that first step with Mayberry, of course. Follow us on social media or visit our website at mayberryinv.com to learn more about how you can get started today. So without further ado, I want to make a dive into the financial statements for MJE. As we said, we're going to be looking at the Q4 results to December 31st, 2025. Okay, first slide, let's see what you have for me. So MJE results for Q4 2025, and I'll focus on the full year 2025, where we'll see that they had dividend income of $426.6 million for the period, down by about 16% to the same period last year. Additionally, in terms of the change in fair value of assets, we had a $1.2 billion loss, and we'll do a dive into that, compared to $1.8 billion gain in the previous year. And then as it relates to the fair value change in associated entities, also marked through the P&L, you see there's a $3.3 billion unrealized loss there compared to $1.4 billion in the year before. So net, the total operating loss for the year was $4.07 billion. In addition, we had interest expense to cover of $666 million, so down 24% from the previous year, which shows the prudent management of our finance costs. And then operating expenses also reduced by 13%, down to $186.5 million. And net, at the end of the day, the business ends up with a $4.928 billion loss. And in terms of total comprehensive income, there's a further adjustment which takes that to $5.7 billion in loss, primarily related to unrealized losses from marking to market the value of the investment portfolio. So on the next slide, let's take a look at that and see if we can get some insights into that $4.7 billion loss. So the next slide breaks it out into the main categories. We talked about the losses in relation to the fair value in financial instruments, which was $3.3 billion. And most of that relates to the holdings in Supreme Ventures Limited. So that marking to market, where the stock price fell by 21% from 24.73 to 19.56, that unrealized loss alone, SVL alone is $3.4 billion roughly, which is the majority of the overall line item that we saw, $3.287 billion. And the second line item we saw was in relation to the fair value adjustments for the associates, entities with which we own 20% or more, have a significant position, and they've therefore been deemed an associate under the accounting rules. And as you can see, there are three assets, three holding positions that make up that $1.2 billion loss. Broilers, which accounts for $898 million loss. We watched that share price from December 24 to December 25 fall by 52.7% from $36 to $17. NCB, that share price fell by 30%. I think we're all very familiar with the NCB story. That stock fell from $51 to $36, and that created a $123 million unrealized loss. And BPOW, Blue Power, that price fell by 6.1%. Share price is shown as well, and that created a $121 million unrealized loss. So when you look at these four stock prices alone, with SVL, of course, being the largest position in the portfolio, these collectively explain the combined um, 4.5 billion dollar loss that we saw for the full year. So it's all explained fundamentally across these four stocks, all being unrealized losses because we didn't sell off these positions. Next slide shows the balance sheet. And what we can see here is the business has huge buffers of equity. So total equity, although falling by roughly $5 billion because of the mark to market, is still at $12.2 billion. So it shows the depth of the balance sheet of MJE, still having $12.2 billion in reserves. And when you divide that by the number of shares, that translates into what we call the NAV, or the book value. That translates into a $10.12 book value. So if you were to break up MJE, sell it all off, pay off all of the money in dividends, which would be the $12.2 billion, and then distribute it, you would still have $10.12 in value. And today the share price is trading below that value. So the fall in NAV has fallen by 32% from $14.89 last year, now down to $10.12 in terms of value. And then you can see the composition of the total assets and the liabilities. The group uses a conservative amount of debt, approximately 40% of its equity, to fund the business. And so you can see that $6 billion of funding to fund the $18 billion in assets. So many banks and financial institutions have leverage that is several times the size of their equity. In this case, it's the reverse. We try not to have more than 40% of the equity leveraged towards supporting the business, unlike a bank where that multiple can be 10 to 20 times. So please bear that in mind. MJ, which is a long-term investor in the stock market, operates with a very low level of leverage. So that's very important to note. Next slide sort of shows the cash reserves of the business. So we talked about $600 million of interest for the year, and you can see that they're carrying, more than 6 months of interest when you see that the cash reserves about $347 million. So the business has a fair amount of liquidity to allow it to be able to meet all of its obligations, primarily debt servicing. And as you could see, the portfolio is still a big portfolio at $18 billion with strong positions in companies like SFIL, NCB, as we mentioned before. Next slide shows the movement in the share price versus the NAV. And we discussed that. So the NAV is basically the book value, sort of the worst case position of the company if you want to think of the stock price from a book value perspective. And we can see here where the share price has traditionally traded at a discount to the NAV, sometimes overlapping, but usually at a discount. And you can see in the light blue line the share price and how that share price has fluctuated from low of 7 to a high of $12 in the last 12 months, while the NAV has had a high of $17.50, and currently, as we said before, is down at $10.12, as we showed on the slide before. Next slide shows a lot of people like to ask this question to see what the top additions and the top disposals in the MJE portfolio are. Bear in mind, MJE makes money primarily through holding asset positions for the long run, and the sell-off plays usually take place over many years. CPJ is a perfect example of a position that we held for more than a decade, eventually exiting at $10.50, doing very well for the fund. But in between, we also do a bit of trading. There's a little bit of trading, and Chairman will ask Chairman a few questions about that. In between, the business does do a little bit of trading, adding stocks and selling stocks as we go along. But this is sort of the smaller aspect of the business, quite frankly. But we're always minded with the flows to be trading and topping up and selling down where necessary. So as you can see here, top additions included GMMB, SFAL, and Dollar. Again, SFAL is a strategic hold for MJE. Dollar has also now become a strategic hold, and we'll talk about that. I speculate that it's a strategic hold, I should say. MJE now owns approximately 12% of Dollar, if my memory serves me correctly, and Mayberry, through one of its other subsidiaries, controls about 21% of Dollar Financial Services Limited. So that looks like that's become a strategic position of MJE. We'll be talking to Chairman about that. JMB, we can see that share price is really relatively cheap these days. NCB, it goes without saying, one of the cheapest stocks on the market with a PE below 6 times. And Blue Power, one of the associated businesses with which MJ owns a 20% position. On the disposal side, you can see they sold almost as much JMB as they bought, sold a little bit of SVL, bought $77 million worth, sold $20 million worth. We can see the disposal of carb spent continues, and I think Chairman has been very open about wanting to sell down his position in carb cement, and so you can see that's consistent. Last year in Q4 2024, he sold about 53 million worth. This year he sold about $15 million worth, and no other notable disposals really in the quarter. But some people like to see how Chairman is trading, or Gary Peart, or whoever the mastermind is behind doing the trades. They like to see what MJE is doing, and so we like to show it to you guys. Next slide shows the composition of the portfolio, which is heavily weighted towards SVL, and we'll talk about that. Followed by Wigton. Mayberry is the largest single shareholder in Wigton, owning about 10% of that. And as a result, I suspect I end up being the chairman of Wigton. They also have sizable positions, as we said, as a percentage of the portfolio in dollar. 5% of the MJ portfolio is in dollar, and that translates to about a 12% holding. And then the only other really notable positions I would say would be like we own 20% of Blue Power and a significant portion of Last F as well too. While 2% of the portfolio is in NCB, and that's close to $1 billion, that's still an immaterial percentage ownership of NCB as a group overall. So it's a stock we like. I would say a relatively small position, but definitely a stock we like. And with that, I think we have finished the analysis. So long story short, year to date for the unaudited full year results, we did have approximately $5 billion loss, but that's unrealized loss. It represents, roughly a 20% fall in the value of the portfolio. We know the stock market in 2025, especially to the tail end impact of Melissa and how that's bothered the economy for a bit and the outlook. We know the stock market last year, generally speaking, was down quite a bit, and that impacted MJE. MJE is not void from that, but we are long-term investors in the stock market, and I think MJE has complete confidence in the fact that the market will turn around, and I'm going to bet it's going to be led by NCB this year, and we'll talk a little bit about where we think the growth potentials are, which stocks we think are still the gems in it. SVL as well too. We still are confident SVL is a stock that, once traded very comfortably at between $25 and $28, peaked at $32. Has potential to be a $40 stock actually, if you think about the growth potential that will come out of Ghana, eventually. And we'll again talk about that. But so in general, I would say the portfolio is down by, roughly 20%. 22%, and it sort of reflects, how the economy, the market turned in the year. But the overall Jamaican economy, I think, is still poised for amazing growth. We've shown amazing resilience in terms of the bounce back since Hurricane Melissa. And I think as we see results starting to come out for Q4, as we see more results coming out, I think we're going to see a few more declines as folks have been impacted by the hurricane. But there's no doubt in my mind that the fundamentals, we look forward to the budget coming up. I think we're going to have the Minister of Finance within the next week or two. So we'll be talking a lot about the economy and the direction that we're going. I think we remain confident in the Jamaican economy, and the stock exchange is really a reflection of the growth potential of the economy, right? When the stock market is booming, it's investor confidence in these companies which are core to the economy that you see play out. So I think 2026 is going to be a great year for the stock market. I'm going to predict that we're going to see huge recoveries in quite a few stocks. I think NCB and SVL will certainly be leaders in that recovery effort. And then we look forward to talking to Chairman and to Gary Peart to pick their brains on, maybe we'll get two top picks from both of them, and they can't repeat the same stock. We get two top picks from them as we go away. All right, so with that, I would like to, again, folks, remember to send in your questions. We'll happily entertain them later on in the session. But for now, I would like to allow Patrick Bataille to kick off with a few questions to either Gary Peart or Chairman Berry. Patrick?
Thanks, Dan. So, Dan, I know in your analysis you highlighted some of the top movers in the MJE portfolio. Mr. Peart, I'd be interested to understand, outside of those movers, were there any company-specific items at MJE that materially impacted the results?
Thank you, Patrick. So let me do your best to answer your question. And so I think Dan touched on a couple of things. The largest contributor to the unrealized loss was Supreme Ventures. But again, not many people know that we had a former major shareholder that sold approximately 100 million shares over the last year. And that's a testament to the liquidity of SVL in the marketplace, that the market could absorb that volume of shares over that period of time. That's almost $2 billion worth of share sales. And so that's one thing. So it's the fall in the price was attributable mainly to the numbers or the performance of the company, which is fairly good given the hurricane. It's just that, as I said, somebody is realigning their portfolio and sold out a massive amount of shares. I don't think at any point in the history since the IPO, not even the IPO, that traded that volume of shares in such a short period of time. So the good news on that is, we believe that shareholders has sold as much as they would like to sell at this point in time. And we've already seen where the stock, which bottomed out at about, I would say, 14.75, has started to trade back up, and we expect it to go back to its normal levels, certainly over the next 2 to 3 months. So that's one. Two, there are several things that will come out of SVL that will help to drive that stock higher. Again, the second biggest mover was broilers, but I'll come back to that. The NCB, for the last year and a half, that Netflix story has been playing itself out. Interestingly, I've never seen so many people upset that somebody has paid $1 billion in my life. But yes, Legion did make the payment, and I think that's going to be a leading indicator for a massive move in the market this year. So despite us keep telling people that, NCB, the bank is fine, all of these, as my country friends say, all of these duppy stories about what's going to happen. I mean, hey, he didn't. He made a payment, and he says he's going to make some more payments, right? So stock is at 4 times, bite. In the portfolio, and you look on the numbers, you'd have seen for the quarter that the dividend income actually increased when you compare it to the prior quarter. And a part of that increase is due to the dividends from NCB. My understanding is that we wouldn't be surprised if you start to see the dividend increase. I mean, I know we had the hurricane, but one of the things we saw when we did the analysis of NCB, they were taking larger than required provisioning, right? So especially when that one-time gain last year, they provided for a lot of stuff. So I think that's worked out pretty well for them as you go into, the stresses of the hurricane. And I think as you get to the back end of June, I wouldn't be surprised if you see an increase in the dividend. So, MJE is positioned very well for that. And I think NCB is going to drive a lot of dividends to that portfolio. I wouldn't be surprised if the dividend gets up to $6 a share within the next 2 years. If it does get there, you're talking about at $40, you're talking a div yield of between 13 to 15%. So if you right now, that's my number one pick. If you can just buy as much NCB as you can. So that's that. The other key thing in the portfolio, when we look at the P&L, that has been a pretty good driver. If you look at the year-to-date numbers, you'd see that interest expense for that MJE has actually trended down, which is a very important point because it speaks to the amount of cash that the portfolio still has. So whilst you see on paper this big number as a loss, when you take out the unrealized losses, you'll see that from a cash perspective, the numbers are pretty small. And so we're happy about that because we think for those specific stocks, they've either touched the bottom and rebounded, and we expect good things for them going into 2026. The other major contributor was broilers. We still think that story is still to be played out. Again, the good news is that we've taken the brunt of that hit in 25. It's unlikely, given what we've seen, they've gotten funding for what the operations are now, and I think that will kind of protect the downside. I don't think you have a more significant downside to come. There are other things that needs to happen there. But I think to the back end of 26, you may really see, after things have stabilized, you might see that stock starting to trend back up, depending on how quickly they deal with stuff, example, with the US subsidiary, because that's where the majority of the losses are and seems to be continuing. So, I wouldn't be surprised, as I said, by June, in some way, shape, or the other, that subsidiary is cut, which would kill that loss and then start the turnaround. So I think the portfolio has gotten its shocks. Some of the small or some other stocks in there, Wigton, they're still the one that bid last year. They're putting together that project, which will add to the bottom line. And, based on how you see the government positioning, there are going to be more RFPs. So I think Wigton is very uniquely positioned to take advantage of those RFPs when they come out. And then also another sleeper, which is Dollar. Dollar has done pretty well. We saw the hurricane, an area where that a lot of loans was impacted. They did the risk analysis. It's relatively low. It's a business that I think, based on their year-end numbers are due, I wouldn't be surprised if they beat last year's numbers. They're currently in discussions with SVL's microfin company. We expect that deal to be completed before the end of the first quarter. And I think it puts Dollar into a position where you may see the first microfinance company that, recorded $1 billion in profits. Because if they continue this growth rate, it's not a matter of if, it's a matter of when, they hit that $1 billion mark. So depending on how things go, they have worked with their customers, especially in the affected areas. They've gotten very good returns in terms of how the customers have reacted. So I think they've passed a lot of the critical periods. So I wouldn't say that they're fully out of it, but certainly by the back end of June, I think you should see significant growth in that stock, and it's a stock that we really like. They're generating more cash than some of the leading microfinance companies on smaller loan portfolios. So those guys, Kenroy, Trevine, they're really doing well over there. So as I said, until the rebound comes, in terms of running the portfolio, what we have control over are the expenses. We see the expenses trending down, which is good. We're building back cash, so we're maintaining interest income as well as the dividend income, because we're positioned in some really good dividend stocks. And, we feel we've seen the bottom, as I said, I'm repeating myself, the bottom of a lot of the key stocks in the portfolio. And, we're looking forward to a very positive 2026.
Thank you. One follow-up question. Dividend income increase in the fourth quarter. Do you believe that's sustainable? And in 2026, I was about to say 25, what do you think is going to be the key driver for that sustainability?
So yes, to answer your question, I believe it's sustainable. The main drivers of the dividend in the portfolio, are the NCB stock and the SVL stock. SVL has gone through 2 hurricanes, which I think has disrupted the business. You had Beryl the year before. This year you had Melissa. So it had impacted, for want of a better word, a very consistent and growing dividend pattern. Um, you know, Based on what I'm hearing, SVL is coming back quicker than as expected. But you should and will expect that 3 months after, your dividend may not be as strong. But in terms of how quickly the economy is turning around, SVL should benefit from that. And you're expecting in 2026, along with a lot of projects that they have, which should come to fruition in 2026, they should have a strong dividend paying year. And so that's why I'm saying I believe sustainable, but more importantly, not only sustainable, I believe for 2026, it'll actually generate more dividends than the portfolio has seen in the past.
Thank you. And then my final one, and then I'll hand it back over to Dan. So looking at the portfolio, there is a high concentration in Supreme Ventures. What is the strategy around top holdings, and is there a thought process around, reduction in some of that concentration?
It's interesting you ask that question, because everybody's like, your portfolio is not as diversified. I read an article about Charlie Munger, and Charlie said he only owned three stocks. One of them was Berkshire, and you had 2 others, key portfolio stocks, which are businesses that he believed in. The business of investing, you try to find a good asset. When you sell the asset, you get cash, and then you have to turn around and hunt to find another good asset, right? And so we think Supreme, is a business that has significant opportunities. And, your ability to position in a company like that has the ability to be a global world beater in terms of a company, why sell it just to diversify? So in addition to that, we've seen where you've gotten the negatives associated with holding a stock with such a heavy concentration, i.e., the price has fallen from a high of 30 down to a low of 14.75. And the portfolio, we still have major positive equity. And so we've weathered that storm primarily because, as I said, there's a major shareholder that was selling. And they sold. As I said, I was impressed with the fact that that sale could have happened over the market for such a volume of shares, and that liquidity was available to take out that customer. I've said it before, I'll say it again. Supreme has significant opportunities. It's a global company now because it operates in Guyana, it operates in Ghana. It has the ability to go into many other countries in the world, which you may see at least 2 or 3 more for the rest of this year. Locally, it's the largest phone credit seller in the marketplace. There are benefits associated with that. It has some fintech, there's a fintech arm, which has now gotten its approvals. We got a very big approval recently. And so all that investment that was made over the last 4 or 5 years, where the core business was carrying about 5 companies that were losing money. We see for 2026, the majority of those companies are likely to show not just profit, but really good profits for 2026. So, we continue to hold that position. And we believe we will get to a place very soon where people will be like, Jesus, why couldn't you have told us more? We would have bought some more of our shares at that point in time. But not before it's time. And as I said, in terms of how Chris, Mark, and myself see the portfolio, we believe SVL is the key to that portfolio, and we'll hold that position. And let's see what the future holds.
Thank you, Dan. I'll turn it over to you.
Yep, thanks. I appreciate that. On the dollar comment, Gary, I want to add, 2-3 more points. It's definitely, so NCB would be my favorite pick for this year, and second would be dollar. And reason why I like dollar is, even at, $2.50 50, that's a 12 times PE using $500 million as the trailing earnings. This is a company that we just assisted in raising $1.5 billion for, that we tried to raise $1 billion from the bond market. It was oversubscribed. As you know, we're only allowed to upsize by 50%. And so acting as their financial advisor and broker, we helped them raise $1.5 billion. Again, $500 million trailing earnings, 12 times PE. That's what the $2.40 stock price speaks to. And Gary, you spoke about this, potentially being a company that's going to make $1 billion. So this business makes about a 30% spread on its borrowing. So if they deploy, $1.5 billion over the next few months and run that through the business, they could make an additional $450 million off of that round of lending alone, which, 450 plus 500 would take them to 950. So this is a business I think will do $800 million this year. And I think as soon as they've deployed that capital and continue doing a good job, they'll come back to the market and raise another $1 billion and deploy that capital again. Second largest microfinance business in Jamaica. And then they do have the arm of the business that looks at accredited investors. So it's not only microfinance, although today maybe 70% of the income is from microfinance. So definitely a company that's poised to get to $800 million in profitability within the next 12 months, which makes it a $5 stock, by the way, at a 15 times PE multiple. So my favorite pick, because I think that there are very few stocks you can buy at $2.50 and watch it double over the next 12 months with a pretty solid management team. So I like dollar. I think it's a good investment strategy for MJE. And I think the next 12 months will certainly play out well and prove that. We all agree that NCB is also going to turn around in the next 12 months for the reasons that you just highlighted as well too. Chairman Barry, so 2025 question to you was,
So, Dan, before you go on, I mean,
sure,
you raised a point on dollar, which I need to share with the public, right? So there's some quirks about a microfinance company that not all investors are aware of, right? So you'd have seen where dollar has basically stopped paying dividends. And the reason for that is we make more money reinvesting their cash in the portfolio because the company is still growing in terms of loan disbursements and gross loans on its balance sheet, right? You're going to get to a point, as all microfinance companies do, where that growth slows and sometimes it plateaus. When that happens in a microfinance company, it starts to generate significant amounts of free cash. So you then get the opposite of what you're seeing now because it's growing, it is just sucking cash to fund loans, right? But these loans are throwing off cash rapidly, right? When you get to that inflection point, these companies, when they start to generate the cash, they're going to start to generate a ridiculous amount of dividends. And we feel, especially in the case of dollar, I don't know if they'll hit that point this year, but whenever it hits that point, it's going to be one of the best dividend paying stocks that you will see. And so again, in terms of the MJE portfolio, right, it's another potential dividend income stock that's going to do very well. So I just wanted to put that out there, Dan. Not many people have the experience in running a microfinance business to know some of these internal matters. But I just want the investors to be aware because when it flips, you won't be able to get the stock at this price.
I agree with you 100%. Chairman Barry, so 2025, rough year for the stock market. We've seen some positions down by 50%, on average, maybe down by 20%. How are you feeling about 2026? What's your outlook for 2026? How are you feeling about the economy, about the stock market? And then I need a pick from you, and it can't be SPL that Gary gave or dollar that Gary gave and I endorsed.
Okay, 2026. So I think 2026 is gonna be a tough year. I don't know what's going to be for the market, but I think for Jamaica, could be a tough year. You're looking on the rebuilding after Melissa. Money is coming in to do that, and also from insurance as well as from GOJ loans. But there's a lot that's been destroyed. So, I don't really have a feel for how the replacement of that infrastructure is going to affect the growth versus, the economy, which has been lost by the destruction. So, one of my economist friends we should get one of them to research it, Dan, and tell us what's likely on that. I think for stocks, though, the stock cycle is driven by growth and also by liquidity. So I noticed, for example, Philip was saying Melissa put a spike in the wheel of the BOJ expected rate cuts. So that's one of the things I think, from my perspective, BOJ called wrong. When we had the hurricane, they should have been easing more aggressively than they did. And it's now showing up. The dollar is revaluing and the NIR is up like 800 million. So there was no need. I think if they were easing more, it would have allowed businesses to get back on their feet faster. They missed that opportunity. But we have the rest of the year before us for them to adjust what they're doing. And that will play into the rebound. So as I said before, the growth in corporate profits is one big thing, and also the liquidity. So let's focus on the companies that we know and we own. So, Wigton, we can see where, they have the opportunity to increase earnings based on the new projects they have. I'm not so sure when the first one will actually start kicking off revenue. Are any of them kicking off revenue this year, Dan?
No, not this year.
So, okay, we won't get much uplift from Wigton this year in terms of the growth, but we expect that from NCB, JMMB, and definitely SVL. Liquidity, I don't think it can get worse from this point. I think it's more likely to get better than worse. So on the balance, I think the stock portfolio should hopefully do better this year than last year. And hopefully we don't have another weather event. We get hit 2 years straight, and we can take a break.
Yeah, we definitely need a break. And it's been the challenge of the Jamaican economy, really, that we are susceptible to exogenous shocks. That's the thing that makes us, makes the economy struggle so much. And we spent the last 10 years, bringing down debt to GDP from 140% to 65%. And then you have one weather event that could possibly set you back by 10 to 15 percentage points in terms of debt to GDP, that you have to spend another 3 years just to get back to where you are, and then pray that hopefully we don't have another event in the next 20 years. But for sure, the outlook for the economy is still good, right? All of the ratings agencies still uphold the outlook, and I think the country is extremely resilient. And I think in every disaster there are opportunities, so it's to look for the opportunities. So for instance, in infrastructure, we're going to have to be doing a lot of rebuilding. And so I think there's a good opportunity. And, so Carib Cement, I think, is a good stock to buy for the long run. A little pricey at $105, but I still think it's a great stock because Carib Cement is sort of core to the rebuilding of the economy. On Wigton, again, I'm chairman of Wigton, but in the public information, I want to say, whilst we won't complete any of the 2 projects in this calendar year, we'll certainly sign the PPAs, sign the EPC contracts, and secure the financing. And I think those are, again, strong signals to the market that these $60 million of projects that are to come, that will help the business grow by 80% in capacity, that'll send a strong signal when the market sees that we've done those things. We've signed a PPA with JPS, we've signed a contract with the EPC contractor, we've secured the financing, and we will perhaps break ground. So I think we will at least show signs of being able to execute those projects, which should be able to help improve market confidence. I'm also going to say I expect this year for the government of Jamaica to put out another RFP. Will it be June, September, December? I can't say. But I fully expect there to be another round of RFPs this year, and that Wigton will be hands down positioned as the best entity to win that RFP or a significant portion of that RFP. So last time around, we had the second lowest bid and we won 50 megawatts, which is half of what they put out there. Government has this ambition to get to 50% renewables by 2030, which is impossible, by the way. We would have to add at least 400 megawatts of renewables between now and what is only 4 years away. So that's pretty much impossible. But I do think we could see an RFP this year for another 100 to 200 megawatts. And so that would create a huge opportunity for Wigton. And if we're lucky, that RFP will come out in June and we will know the results of it by December. So there could be another catalyst for driving growth of Wigton, another project won by Wigton. And also Wigton is looking regionally at other opportunities. So it's not impossible that we, could find a project in Guyana, Cayman, Barbados, wherever, a 30 megawatt or a 50 megawatt project, and that we could also win. So Wigton is definitely poised for growth. Strong balance sheet, $3 billion in cash, just looking at projects to deploy that cash at. And I think before the year is out, we should add a new project into the portfolio that we've secured, and then would spend time working on executing on that project. Carb cement, are you a buyer or a seller, Mr. Berry, of carb cement, given the huge infrastructure development now needed in the country?
Well, I told you I was a seller 3 years ago, and I'm still a seller. But I'm selling into a rising market for that stock, so I'm not like gonna crash the market in it. It's going to be a slow and steady selling. I see a question here from Limitless about the dollar increasing NPLs before Melissa. So I think by now most of the public is aware that there were several people doing some pretty significant real estate scams out there. And unfortunately, dollar got hit in that whole thing. And that's primarily what drove up the NPLs. Since then, the management put in a lot of new measures to kind of stem the possibility of that happening again. So I don't see that as a risk going forward. And it wasn't a case of, I would say, it was just a few cases of this situation where they got hit by the scammers, and I don't think it's likely to recur. Also, they've been building a lot of business with the small business group, where the loans are much more, which are smaller and more dispersed. So that's also going to mitigate against that going forward. And so far, that portfolio is doing very well and performing very well. So that answers that question about dollar.
And by the way, we were privy to see a study of microfinance companies that looked at quite a few of them, Access, Dollar, and two others, LASF, and one other that I'm forgetting. And Dollar is best in class in terms of managing NPLs, ECLs, cost efficiency, and so on. So Dollar is really best in class in terms of managing that portfolio. They've got a great team over there in the form of Kenroy and Trevine and others, I'm sure. And so it's a
And a strong board.
yeah, and a strong board. So it's a great management company that we really like.
But there's one thing I don't agree with Mr. Peart. Mr. Peart says that they're going to plateau and run out of loan business. But I actually see it the other way.
Mhm.
I think Dollar has tremendous future growth opportunities. I don't see them plateauing anytime soon. So I think I'm looking forward to strong growth going forward for several years to come. And I think they should be trading at maybe 20 times because of the growth that they're experiencing.
Huge growth potential. So $6 billion loan book, that's going to probably grow to $7 billion this year. I mean, I could see a $10 billion loan book in the next 2 years, but I think Gary was sort of alluding to at some point in time, the growth rate slows down such that you're not having to reinvest all of the profits or a substantial amount of the profits. And then what do? Then you see the dividend rate pick up. So perhaps I agree with you. They can grow that book into perpetuity, perhaps. But I think at some point in time, the growth rate slows down such that you can pay out much more substantial dividends. And I think that was Gary's primary point. So
Thank you, Dan.
I still think he's wrong.
you still think he's wrong that the growth rate's going to slow down?
Yeah, he's not
Okay.
going to slow down.
Growth rate's not going to slow down. Wow.
I don't think
Either
so.
way, we're just arguing over whether it's a $5 stock or an $8 stock in the next 2 to 3 years, right, Gary?
True.
That's the point.
Yeah, I was just simply saying, I'm not saying it's going to slow down. No, I'm saying that one of the things about a microfinance business is that when the growth rate slows, it generates significant cash. So at this point, the company is growing so fast that we have to be reinvesting every single dollar of cash, plus borrowing money to fund the growth rate. So I'm just saying, I'm not saying that I want it to stop, but just be aware that when it slows down, the flip side in terms of a significant generation of cash will occur.
Yeah, and it's a great point that today we're reinvesting the profits in the growth. At some point in time, when the growth slows down, and we can start to pay out those dividends. So we're into the Q&A segment, folks, and we've been answering your questions without specifically referring to it. So I think Limitless, you asked about the 168 megawatt RFP being a bit delayed. I spoke to the fact that I think that's going to come back on stream later this year, and we think that's going to create huge growth potential for us. Somebody else asked about Chairman or Gary, you guys decide. Will MJE be taking on additional leverage to buy more stocks to take care of cheap prices? So again, the 40% debt to equity is more or less self-imposed. And so somebody's asking the question, Chairman, will you take on additional leverage to buy more stocks?
No.
Okay, you heard it here first. So no need to over leverage the business. Vicematic asked, how is Wigton going? I hope we've answered your questions, Vicematic, by alluding to the growth potential and the projects that they're currently working on and how they plan to make use of that cash. The next two projects will cost about $60 million US. And if we're to put in 25% equity, would require about $15 million US of debt at 160 to 1. That's about $2.4 billion. So most of the $3 billion is almost already spoken for. We're going to definitely use that to do these next few projects. What's other question? What does management see in JMMB, and why are you increasing your position in JMMB? So my recollection is you bought and sold just about the same amount, so you're not necessarily increasing your position.
I think we sold more than we bought.
You sold a little bit more than you bought, actually.
Yeah.
So you're not really increasing your position in JMMB. You've just been trading the stock. And indeed, in the last quarter, just looking back at the report itself, it looks like you did, in fact, you bought $112 million worth and sold $119 million worth. So we weren't, in fact, deepening our position in JMMB. But because they asked, what do you see in JMMB? Do you care to make any comments about how you feel about JMMB?
Yeah, well, JMB is like the rest of the banking sector. They got hit with a high hike in the interest rates, and NCB's multiple right now is 4.5, and JMB's is 5.5, and I think they will continue to improve over the next 12 months. So it's basically a cheap stock, but we actually didn't increase our position.
Gary, this one's for you. This is a good question from Philip Burgeon Invest, which I think is Philip Burgess. Is MJE a strategic holder of First Rock shares? I'm sorry to laugh. I didn't mean to laugh.
Is what?
Is MJE a strategic holder of First Rock shares?
No.
Okay. Okay, good. So perhaps this confusion may be coming from the deals that they've seen Mayberry Investments
We
do.
don't own any First Rock.
We don't own any First Rock
No,
shares.
no, we
Okay.
don't own any First Rock
To be
shares.
very clear. Yep. So this
We own Iron Rock.
we own Iron Rock,
Yeah,
which is an insurance
That's an
company.
insurance
yeah,
company.
yeah,
Yes.
but not First Rock.
But not First Rock. So simple answer is no. And I was wondering if that was because of the Hambani deal we did, which is an excellent deal, a bank financing deal that Mayberry Investments did alongside First Rock, and that project has been a success. We invested $15 million in the Hambani project, paid off Sagicor with $10 million, secured $5 million to complete the project. We stayed very close to the project, which is 11 luxury homes, standalone homes of around 7,500 square foot, I believe, Patrick. And that
Best
transaction,
deal on the market right now.
that transaction's gone exceptionally well. We just completed 3 units. First Rock just completed 3 units, all sold on average for $1.8 million US each. Another 3 will be completed by the end of March. I think they're under scrutiny, about to go into contract, and that average price is going to be more like $2 million US. And then the remaining units will be finished by June, and we expect those to sell for about $2.2 million US. So
Why are you selling them so cheap, Dan?
well, it's really for First Rock, our number one objective is to complete this, have it done and dusted by the end of this year so we can handsomely reward our investors in the project. And so I think at $2.2 million US, I think they're a good deal. And the project is profitable, and that's what we do at Mayberry. We get in, we help people close deals, we make money for ourselves and our investors, and that's what we do. And that's the Hambani project that a lot of people thought we were crazy, by the way, for doing that deal. But Patrick, I think you'll agree with me. It's one of the most creative structures, best deals we did last year.
Totally agree, Dan. And I'm sure your phone is ringing just like mine on the basis of it from tons of other people interested in Mayberry picking up their projects.
Absolutely. Now I've got 50 people wanting us to help them with real estate projects, which isn't something we really do, but we do look at specific projects. And if we see a project that we really like and it has great potential, then, sure, we'll do that deal. But we digress. That's Mayberry Investments Limited. Tavares Donaldson asks, easy one for you to answer, Chairman. Does MJE have a board seat on JBG's board?
No.
And how does Mayberry feel about JBG? That's another question that someone asked.
I would say we are shocked and disappointed in what has happened there. We still don't really understand how it happened, why it happened, and we're hoping for the best for them.
So is it safe to say that it has not been resolved to your full satisfaction?
I said what I said, I don't understand how it happened. And, it's a great tragedy for Jamaica Stock Exchange, and for the company. And it's really affected our portfolio quite a lot. So about $1 billion.
Yep, $900 million unrealized loss
So,
there.
it's just what it is. I don't know anymore. I can't say anymore. That's all I know is what's been in the public domain.
Okay, very good. Well, I promise you, we will have Chris Levy back again to talk about JBG results because we see them bouncing back strong. That's good to know, but we may have a few lingering questions on what happened and where are they with the investigations and what do they intend to do in terms of going after funds that the company was defrauded of. So those are definitely questions left unanswered for me. Orville Reeves, we've only got about 5 minutes left. Orville Reeves says it was suggested from Gary, for your level of experience and knowledge, why did it take you guys so long to recognize that? Whoa, what was Orville asking? It was suggested from the get-go, but Gary, for your level of experience and knowledge, why did it take you guys so long to recognize it? I'm sorry, Orville, I don't understand. Referring to dollar dividends. Oh, are you Orville? Oh, Orville, you're saying you could see that the dividends are going to come and they're going to be strong? Okay, good for you. Well, keep buying more of the stock. Hopefully, you'll end up being a top 10 shareholder like us. We spent $1 billion to get to our position, so I'm not too sure if I understand your comment, but hey, more power to you. Yes, we do believe the dividends are going to be much stronger in the future and that the stock is dog cheap. So we think it's a good buy, and that's why we have that one in our portfolio. I think with that, we've answered most of the questions. Most of the questions that came in. So Gary, Chairman, I'll ask you one parting question or comment. And Gary, I'll also ask you. So same question to you that I asked Chairman earlier. I mean, how are you feeling about the stock market for 2026 and for the economy of Jamaica? Because the stock market can't outperform the economy. I mean, how are you in general feeling about 2026? And why should somebody remain confident in MJE and its potential throughout 2026? Again, at $8, that stock's relatively cheap, well below the NAV of $10. The NAV's down 22%. We would like to hope that, based on SVL and NCB, that NAV's going to be growing. But in general, how are you feeling about 2026, about the economy, and about the MJE portfolio in particular?
Yeah, I'm a little bit more optimistic. I do think the stock market will outperform the economy, primarily because the results of some of the large companies have been so bad for the last couple of years. But the sun is rising. I referred to NCB earlier, where that was just a shareholder-induced scenario, in that a larger shareholder had his challenges. He has made that payment, and they're still non-believers, in that there's some other payments to come, and I just see it as something where he'll be able to find the funding to restructure the remaining amounts on that bond. Interestingly, I bet somebody that the same borrowers who've been clamoring for their principal and interest, now that they've got the principal and interest, they may very well turn around and lend it back to if asked, because that's our business. Our business is fear and greed, right? So when he made the payment, the fear is gone. So you're like, all of a sudden you want back the interest. And when you stop and think about it, how many other bonds, US dollar bonds, are out there that are paying 8%? And it's not a lot. And so, I think that payment is part of the reason the dollar is revaluing. The insurance money from the hurricane is floating around the place that comes in US dollars that has to be converted. The hotels are all trying to build back, but they don't have the customers as yet. So the high level activity in the hotel sector is just not there. It has spillover. It has spillover on the suppliers, where if you stop and think about it, when the hotels are full, they're consuming X amount of eggs, Y amount of chicken, A amount of bacon, etc. That's gone. And so what we're seeing, you're not seeing that traditional demand for US dollars at this point in time. And I think that's what is driving the revaluation. And don't be surprised if the dollar continues to revalue and go lower. Against that backdrop,
You mean
I think
higher?
the rebuilding effort.
He's saying the 158 exchange rate could go lower.
It's at 157 now.
Higher in value.
Okay, higher in value. Okay.
Yeah, it may touch the 156 level. You never know. So I think what you have now is that with the rebuilding, that's going to drive the economy. And you're coming out of the hurricane, we have the negative impact on GDP. You're going to have the reverse now, and it's right across the country. As you rebuild, the government has come out. They either have started or they're putting monies into the hand of people who are affected. That money will be spent. So you're going to see that start to flow through. The financial system has gotten a big hit over the last 3-4 years. You're seeing NCB coming back very strongly, despite the excitement on the shares. The performance of the company continues to get stronger. You're seeing Scotiabank. Scotia is just kicking out some really, really good numbers. I expect GMMB to start bouncing back. The issues that they had with the holding company in Canada. You're seeing those numbers starting to come back. So share of profit is gonna flow through on that side. So I think the financial sector stocks are likely to have a rebound. And then if you stop and think about it, the real estate market, just seem to be overplayed at this point in time. Rental yields are going down. If you one of the things I've started to do now, you drive around Kingston at night, you see all of these skyscrapers and there are no lights in them, and that's not telling me that they went to bed early. It suggests that they're not selling as quickly as expected. Commercial real estate, the prices are coming off. There's the last time we checked, there's about 1 million square feet of available space in Kingston. So if you're not making money in real estate, you're getting less than 0.1% on your savings account in the commercial banks. Where are you going to put your excess cash? And I think a lot of that cash will start to find its way into the market. It's like I saw somebody recently trying to do an IPO. And the IPO is coming at 15 times. Why would I buy an IPO at 15 times when I can buy NCB at 4 times? I can buy JMMB at 5 times. I can buy dollar at 11 times. So that has massive growth potential. Carreras has just run up, but I mean, there's just so many bargains on the market right now. I don't see them staying there for a very long period of time. And I've seen certain players starting to move towards the market that had come out over 2-3 years ago. They're cycling back to the market. So I'm a bit more optimistic that you will see a rebound in the market, just as you will see the rebound in the economy. Most of the construction and the rebuilding will be between now to June. I think once you get to the back end of June, knock on wood, no floods, no hurricanes, you're going to have the economy is going to have a stellar July to December. But until then, the fiscal is going to be challenged a bit, but we have room to borrow some money, which again is good because those borrowed funds will find its way back in the economy to help power the second half of 2026. So that's my view. As I said, it's a little bit more optimistic, but it's coming from some of the businesses that MJE is investing in. A lot of the businesses that MJE is investing in, and then also some of the other smaller businesses that I see around town and the conversations I'm having with a lot of the business owners. So for me, Dan, as I said, I wouldn't be surprised if the market outperforms the economy this year.
Good deal. I share that view, I think, for this year in particular, because as you said, in terms of asset class, real estate's gotten really tricky. And so I think stocks and bonds are the obvious answers, especially for the large investors. These are the options. There are a lot of stock prices, as you said, that are really cheap, 5 times, 6 times, 8 times. A lot of blue chips in the market today that you can get 5, 6, and 8 times. So I do agree with you. Pricing IPOs at 12 to 15 times, unless they're rock stars, it makes no sense because they're blue chips, tried and proven companies out there, businesses out there that you can buy at 5, 6, 8 times. And so I'm excited about 2026. I have to ask, Gary, so PB jabbed me because NCB didn't get to where I thought it would get, and so PB, I'm going to reset and say $75 is where I see NCB Act. I just need to see 3 quarters of good results. The first quarter we know is not usually good because of the asset tax. But if second and third quarter come out, I'm saying that stock's getting back to $75 this year. That's my prediction on NCB. And then I have to ask you, Gary, because 3 different people, including a billionaire, asked me, did you give Michael Leachin the money? You're pleading the fifth? I'm not hearing you.
You're muted. You're muted, Gary.
You're muted. We're not hearing you.
I can neither confirm nor deny, but all I can say to you is that I'm very happy he has made that payment, because I think that payment is going to be a leading indicator for the rebound, not just of NCB, but the stock exchange and the Jamaican economy as a whole.
All right, say no more. And Chairman Berry, last words to you, sir. Why should somebody consider buying MJE stock at $8? Please tell us, why it's a buy in your estimation.
Well, the reason we started MJE is because clients keep coming to us and saying, guys, we want to invest like you. And, know that that's why we started MJE. So now everybody gets to see all our successes and our pimples and our warts. So that's the reason to buy, A lot of our money, personal money is in it. And definitely a lot of Mayberry's money is in it. It's not a joke, it's a real thing.
Well said. And I'm also a big fan of MJ and a big investor. And I started this journey 8 years ago. Can you believe it, Chairman? This last month makes 8 years I've been doing this, and you've helped make me a rich man, if I can say that on TV and not get targeted. And it's because of the stock exchange, guys. 250% returns for me in the last 8 years, and still climbing. And I left my pension back at Sagicor, tens of millions of dollars, by the way, and it's up 28% in 8 years. And the portfolio that I grabbed and started with none other than you, Chris Berry, that's up 250%. So thank you, sir. I do appreciate you. Guys, MJE at $8, great buy. The way you build worth is by time in the market, not trying to time it, but spending time in the market. 8 years later for me, 250%. I'm retiring in 5 years, people. I'll do this for the fun if I keep doing it. But I'm a happy guy. I'm not trying to be a billionaire like some people who may be around. I'm good where I am. Just trying to, Patrick, as I told you before, I'm quite good. Just trying to keep going for the next 5 years. Keep my brain active. So MJE at $8. I'm telling you guys, it's a great buy. You get the minds of Chris Berry, Gary Parrott, Mark Berry, building portfolios for you. I'm going to predict, I have no inside information, in the next 2 years, SVL could be a $40 stock easily, and we could see something really big with Supreme Ventures Limited. So, well, folks, that's it for today's discussions. I hope we've given you some insights into MJE and to the market and what we expect to come for 2026. I'd like to thank our viewers, as usual, for tuning in. Big thanks to the panel, to Chris Berry, to Gary Parrott, and to Patrick Baitai for all of your insights in that great discussion that we had. If you're curious about updates on our virtual investor forums and briefings, then find us on social media. We share our live stream dates and our upcoming guests on our official social media pages. Remember to follow us on social media to stay up to date with all things forum related. We have an exciting schedule for you guys this season. Make sure you tune in tomorrow as we have the Minister Favour Williams as we go over that one and look at the performance of the Jamaican economy for 2025 and what's up to come in 2026. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Well, remember, wise investors, slow and steady wins the race. Keep safe, everybody. Goodbye.